Hey all, welcome to Bro Billionaire. This is Raghu. Happy Republic Day. Um, I'm having COVID symptoms, and our doctor has advised me to isolate very mild symptoms. I was just sitting at home, not sure how I got it, but still, just to beat the boredom, I thought I will bring you some Republic special video so that you can become a successful trader. Now, this is nothing new. Always please understand when you go to YouTube, there are a million strategies which you will get, but I'm not teaching anything other than what I have taught you, but in-depth understanding. When I go ahead and create a 1 or 2 hour video, I'm sure you will not have the capacity or stamina to go through it, or even if you go through it, you may not be able to understand it. Now, before you go through anything else, I just wanted to tell you that there are some beautiful videos which understand the concepts of price action. One is go to Bro Billionaire. If you have not subscribed, request you to subscribe, like, and please do encourage us. You will become a successful trader just by watching my pivot price action videos. Now, introduction to Candela pivot, you need to watch. Introduction to pivot with price action. If you have stamina for 2 hours, you can watch. Otherwise, go straight away to decoding price action, because you have four key secret of pivot boss price action candles, and every market revolves only around these. So I insist you watch it whenever you're free. This is Cambrilla, and this is importance of R3 and S3 and importance of R1 and S1. Please do watch. You will not be disappointed. Right now, this video is more about trading psychology. Like, what is trading psychology? Now, everybody thinks trading psychology is something new. So how we need to overcome this psychology. Now, before going there, what is trading psychology? Trading psychology is something like, you know, market is going to go down, but you're frozen on your seat. You're not able to execute the order. You just keep watching market going down, miss all the money. And since you cannot control your mind, you enter at the bottom of the downfall only to see market reversing. Or market is going high, you know market has broken out, you know market is going high, but you're so hesitant, you're not able to hit that execute order. You will just miss the order, allowing it to pass in front of your eyes despite knowing everything. Now, what is this trading psychology? But you enter somewhere else and lose money. That is trading psychology. I mean, constant fear. Or you might have entered a trade, you know market is in breakout, but when the market goes say around 50 points or 10 points, and in a pullback, when it comes back and hits around 5 points of your profit, you still in 5 points profit, but losing that 5 points profit out of 10 points makes you to exit the order, only to see that market keeps going high 100 200 points. Now, this is trading psychology. I'm not going to be very preachy, right? So stay put, and I'm going to teach you a method how to beat this. Right now, this is what when I started my stock market journey in August 2019. In fact, I entered in October, but before entering, so there is another history. In 2013, I had entered stock market with 5 lakh capital, and I had lost around 58K, made around 50K, and my love affair ended there. I did not have any kind of fundamental background, any kind of technical background. Like most of our own traders, even I wanted to make money, just entered and came out of it. Now, this time around, I just wanted to build a solid foundation. Like most of you, right? You scan YouTube to learn something new, so that you can really gauge the market, understand the market structure, and then you want to make money. Likewise, not only YouTube, I went so deep. I picked up these candlestick patterns. You can see what is positional trading, what is demand zone. See all the dates. August till September, October, I was just going through these demand and supply notes where I wanted. See, I even built a personal plan. So this is where most of the people advises what should be your money management, etc., core strategy, technicals, right? So I did so much of things for 2 months, and then I entered option trading. I straight away entered Nifty, and after entering Nifty, This was my first year gain. I mean, my loss is more than that. So all you need to understand here is, yes, I spent almost 8 hours per day. I took around 15 days, 2 weeks off. I wanted to understand, build a foundation before entering the market, and I built it. Trust me. The reason why I showed you that OneNote is it's a memory, constant memory. It's a Wycroft supply and demand method. I finished a complete course, including rules, regulations, everything, the amount of size you need to take in trade, everything. And this is how much I made, 3 lakh plus loss. And here I entered into a never-ending cycle of going through YouTube's. I used to watch all the channels started Bollinger Band, RSI, stochastic RSI, VWAP, anchored VWAP, you name it, right? Then triple EMA crossover. You can see some of the methods I have shared on the video. Then I read The Secret of Pivot Boss. Then I went into Oliver Wese books. Then I went into supply demand. I told you, oh, I bought Scott Craney's harmonics. I'm a master in harmonics. I can tell you where exactly the potential reversal will happen. And I went through the midday reversal technique. So many techniques, so many, never ending. But still I was not able to make the money. The entire year was wasted. What exactly I was doing was, the greatest mistake I was doing was, I was not sticking to one particular method to increase my money. So it was a late realization. I think towards the end of that loss, even in early January, February last year, I incurred 1.5 lakh loss. You won't believe, I incurred 1.5 lakh. But somewhere I realized, okay, what was the mistake I was doing? Right, I'm going behind too many methods, and every method is fantastic. I started understanding the concept and I started growing as a mature trader. From a boy, I was becoming an adult, juvenile, and I wanted to become a more mature trader. And after understanding, I read Secret of Pivot Boss 5 times, but never once, trust me, I stuck to that secret of pivot boss, this thing. I never understood what exactly I was doing, never stuck to it. And whatever you are seeing currently, this is my last year overall gain. I told you January, February, March was continuous loss. But then this is how much I made. What is my capital? My capital is always 1 lakh or around 75K, 75K to 1 lakh. Right now, this is where I started. I have my trading journal, but I seriously started this trading journal. Now this is January. What is the date here? 2021. Now so many number of trades. I'm trying to crack all the methods. Over trading, losing money. This is the brokerage. This is how much I'm losing. Now what I wanted to follow was, I wanted to follow what method I was doing. Right, I did a lot of things. Understand here. What method? Pivot trading. Okay. But entire January, I failed to follow this pivot trading. And by then I have studied 5-6 times pivot trading. I know Fibonacci trading. I know everything, but still this is ending up, right? And if you want to just understand what kind of a personality I am, right? And I have several strategies of my own. Probably I have around 20 strategies, right? You won't believe, I have 20 strategies. If you go to BNF some other time, I'll explain it. Each strategy can make you enormous amount of money. Why is this not? Okay, yeah, it's here. See here. This is long term anyway. So I have 12 strategies past year. These are the strategy names. You can go here, BNF Bank Nifty strategy. I have made the observation. What are the rules? You come above R1, I have made the strategy here, right? You can watch it. Back testing, each and everything. I have the back testing, but still I was not able to make money. Now, I'm sure even you have a lot of strategies. The reason why I took such a long time is to make you understand that it's very important for you to check all the strategies, check going through a lot of several YouTubes and believe what you're doing. Once you believe what you're doing, then only you can make money. So once I started checking out and understanding my own mind, whatever method I have learned, I'm not able to execute it even last year, January, February, March. March, I started executing. I had made 70 plus K, but went into loss in last 6 days because I went into bad habit. Since April, no way. I have done enormous amount of money, right? So every month I have made more than 70K. Even this month, currently I'm sitting on top of above 80K for a 75K capital. Now, how did this happen? Is there more money to it? Definitely there is a lot of money in the stock market. You can make tons and tons of money, provided you simplify and become a mature trader. Understand that trading is all about probability. So whatever method you are teaching, that method has a probability. It's going to give you an edge. Now here, so it's a simple story before we further go and do the bar counting and close this video. So understand, I mean, I'll pick up this example from Trading in the Zone. It's one of the amazing trading psychology book. You all should read it. Imagine there is a small kid. You are a small kid. Wonderful, is a very jovial kid, and they have a small pup at home. He just loves. He pulls the dog's not pup, a big grown-up dog, tail, ear, everything, nothing. That dog is so saintly. It will not do anything to the boy. So, as a grown-up kid, what is his experience with dogs? Right? His experience is very affable, very lovely. He's enjoying it. Now, all of a sudden, this kid becomes a 6-year-old or 7-year-old. He's on the road. He sees another dog of similar type, just goes and tries to hug it, and that dog just bites his face. Now, this experience he has never experienced in his entire life. So for that 6-year-old kid, the experience which he had with his own dog inside the home and the new experience outside the home, which one you think he will remember? The bad experience. Always remember, bad experience overcomes positive experiences. For his entire life, he will be very scared if he allows that dog biting experience to stay in his mind. Otherwise, as he grows up, he comes out and understand, okay, dogs also have character. Different dogs have different moods. So how to play with it? First earn the respect and then toy with them. Now, trading is a similar experience. If you're a new trader, you will relate to this experience. When you started your trading, maybe without knowing anything, you might be just making money 3, 4 times, 5 times, or 6 times. But one time you will lose big time. And that bad experience is going to stay with you forever. For entire your trading life, it's going to stay with you. And that is why you're not able to make an entry even after you know that market is going high. Now here, understand, as I told you, no matter how much YouTube you learn, how much money you pay outside to master the trading methodology, knowing the market will not make you money. Knowing yourself, your trading psychology, and trying to master it using only one method can make you a master. Now, okay, all right, that's all. This is trading psychology. How you have to overcome your fear and greed, how you have to take the probable trade, how you need to be balanced without fear, even when losing or even when winning, not being ecstasy, will define the altitude of your successful trading career. Okay, that is trading psychology for you. Hope you can understand. Now, you know, when you see this, this is a naked chart of Nifty. So recently Nifty is in correction compared to Bank Nifty. See, Bank Nifty is in sideway. So I wanted to pick some examples. So that's the reason I'm choosing this Nifty, but you can choose anything and everything. Now, this bar counting is a method where you need to understand in every market, especially in a trend, upside or downside, how you're going to identify the trend, how you're going to identify the trend reversal. Now, yesterday I made 8K profit, right? Now I traded in the initial, this short pull, I made 2K and rest of the 6K was in uptrend. Now, how do I know market is going to go into uptrend? I told yesterday, if market sustains above high of the day, you need to think about going high. Now, how do I know? This is not rocket science. It is purely experience. Now, you need to understand very quickly, Every swing high, every swing low will act as a support and resistance. All right, every swing high, every swing low. And whenever you are in a downtrend or uptrend, especially in options, you have to be very careful. Or let me remove in any market, I don't want to confuse you. The last swing, do you see this? This is the last swing. This last swing is very, very important. All right. This is day before yesterday's fall. And this last swing, it had broken and come down. So whenever a last swing is taken out, you need to understand market is in reversal mode. So market is in a very strong downtrend, and in downtrend we have a last swing, and it needs considerable effort of conviction to remove the high of this last swing. See what happens here? Above around that high, market always reverses, right? If you know the way I trade, 15 minutes support and resistance, market reversed. Now we have a strong bar, and you know how the bar, when you combine these two bar, why inside bars always work? This is against trend, but still understand. When you combine this bar will be like this. Or when you combine 15 minutes, this bar will be like this, right? So why this annotation is not coming? What do you see? Reversal pin bar. So every pin bar is a, what do you call? Every pin bar is a failed breakout. So at the bottom, if market is so strong, why you're having a reversal pin bar at the bottom? So there is someone buying, but still, is that enough for you to go for a trade? This high should be broken on the day one for you to do a scalping. But again, the last swing high is this. This high, if it is broken, then market can give you a good move upside. So technically speaking, this is one high. So you have one higher low, but second higher low did not break it. It took a lot of time. Here it started going, okay, one higher low, one higher low, one higher low, and it broke this. So why you need to think when market is in uptrend after the last swing high is broken is because a lot of buyers will think the same way and come and take the trade. Now here, add 20-day moving average, EMA, I have explained you whatever you want. Now market came here, it broke this, right? So it broke the high here. Now from here, how do you know that market will not break? So one is reversal pin bar. So you know reversal pin bar can act. There is something called as ABC pattern whenever market is above 20-day moving average, right? So 20-day moving average means intraday it is in uptrend. The 20 days should be sloping up or sloping down. So you need to understand whether what kind of trade you want. So even if I remove everything, 1 minute, this is very important for you to understand your trading psychology. Here in this, what kind of trade you want to take? Down or up? Global markets is melting down. Indian market has a lot of downtrend here. But when you see visibly, what do you want to do? You don't have any technical background. You don't have any fundamental background. What do you want to do? You want to buy. So always go with your wick. When you're in confused, you know there is no trend. Just wait. Range bound trading is separate technique. But when you know there is no trend, say understand here. Okay, watch this one yesterday. What kind of trade you want to take? For visible eyes, you know options has intrinsic value, extrinsic value, option Greeks. Prices keep moving up and down, especially during expiry. But if you want to be a trader who wants to make millions of rupees, you need to have control over your mind. Now, is there a trend in this? Here uptrend, after that, what happened? It is sideways. So even if I add 20-day moving average, what do you see there? It is flat. So there's no trend, right? So when did the trend resume? Here. So for a visible eyes on the market, in the market, you need to practice whether you can see a trend just by seeing at the naked chart. Forget about all your mumbo jumbo, all the technical analysis you have learned. Don't be overtly what do you call obsessive about technical analysis. You are learning technical analysis to make money, so it is very important that you make money. Now with about 200 day, the previous day high, the previous range is broken, right? This is the previous day range, previous range, double top. Now it takes support here, so I can go even further. Now this high came, tested what? Tested the high and low of yesterday and today's high, and then market went up. When next time it comes here, what is it testing? It is testing this doji decision. What here? After this doji, market tried to go up, it went up. So this is the important decision making point, and also this is the support. So twice it tested here, so you know it is testing here, and then this range is broken. All right, so for me, after any double top is broken, and if it is above 200 MA, you have a buying chance. Similarly, if a double bottom is broken and if it is below 20 MA, you have a selling chance. You can go short. Now this is broken. I know this will act as strong resistance because market has gone down here, right? Market has gone down here. See, that is where the testing has happened here. Wherever market breaks, the peak will be tested. Now here, for you to understand, I want you to consider this. Say market is in uptrend. Whenever you get a red bar, consider it as L1. Okay. A pullback trade. So it is above, very far away from 20 MA. This is L1. Okay. So one pullback. This is L2, second pullback. Now any green bar which breaks the L1 or L2. Why L1 means it's a red bar. You can call R1 or R2 also if it is a red bar, or you can call it as green 1 or green 2 for a green bar. Now the methodology what I'm teaching is called as counting bars, and this methodology is taught by Al Brooks. He is one of the pioneer in modern day price action trading. You can read his books. It's available in Amazon. But anyway, I'm not currently picking his entire thing, but it's a very good concept for you to understand. And these concepts I use in my trading. That's the reason why I'm showing you. All right. So I have one leg pullback. You can call it whenever you see a red bar, one leg pullback. So usually in a strong trend, you will have only one leg pullback or two leg pullback. So if there is a four leg pullback, consider it's a trend reversal. All right. It is a trend reversal means there is a trend is going opposite to it. Understood? So we are about 20-day moving average for you to use this method. You count, okay, 1, 2 red bars. Okay, this is your signal bar. This green is your signal bar. All right. Because after the red, you are having one green reversal wick. This is your signal bar. The high of it is your entry bar. What is your stop loss? The low of this reversal pin bar. Now, after this, you're having one more red bar. So you're afraid, okay, I'm having red bar options here. It's a premium is decaying, but hold on. If market is about 20 MA, you need to wait. Within 2 bars, market will go up. Right now, this bar is broken, market went up. Excuse me. Now understand, once this high is broken, the L1 high, the first leg pullback high is broken, you need to start counting the bars again. So this is the first bar and this is the second signal bar. After this, market will go up, right? This is a big bar. What will you do? This is L1, this is L2. And then market went up again. This is L1. So this is how you need to understand. This is little advanced concept. The better way to understand is here. Okay. Now this is where most of us will be very shit scared when market is going in a downtrend. Now here, what is this? H1, market is pulling back, right? Market is pulling back. How many legs pull back you need to have for trend to reverse? At least 4 pullbacks. Very rarely in a strong trend, it can happen in a first leg itself. It will never happen. Understand? One leg pullback. What happens here? Market goes down. Where do you enter? You will enter here, because after this, you have, this will be your signal bar and this will be your entry bar. Understood? This is how you need to enter. Just give me a minute. So what happens next? You get one more leg pullback. So this is 2 leg pullback. So where will be your stop loss? Once you enter here, your stop loss is here, right? So your stop loss will be above this red candle close. Now within 2 leg, market is going up. Okay, once this pullback, the green is a pullback, right? In a ground downtrend. So a red bar closes below it will becomes your signal bar, and the next candle will become your entry bar. You need to enter. Below this, you are going to enter. Now see what here. Watch here. So you have, this is a double top. Now all double top should be considered as 2 leg pullback. 1 leg, 2 leg. Understand? Same thing. 1 leg, 2 leg. And it will go down. This is closer to 20-day moving average. And below that, see what happens? Market goes. Do you see anywhere 4 leg pullback like this? 1, 2. So whenever you see 4 leg pullback, 1, 2, 3, 4. After that, stop counting. It means market is in either sideway or it is in downtrend, right? So watch here. Market is in uptrend. So this little red first 1 leg pullback, second 2 leg pullback. You have a green bar trying to move up. This is 3 leg pullback, and then red bars go up, and see the 4th leg broke the range, market reversed. So you will never have more than 4 leg pullback. You need to understand this. So either 2 leg, 3 leg. In a strong trend, there will be only 1 leg pullback, not more than that. See here, market is in uptrend. 1 leg pullback, market goes above this signal bar. The green bars are called as signal bars, okay? Because after pullback, you just need a signal to enter. The high of it, you will enter. Now, this is the second leg pullback. This is the third leg pullback. You have red 1, 2, 3. So 3 legs. Count number of times red is trying to push down. After that, what happens? Market just goes up. So in the same thing, the previous example, what I want to show you here is if you have 4 leg pullback, sideway market, stop counting the bars. I'm talking about in a trend. That's the reason I have marked about 20 days. So when you mark about 20 days, so where is this happening? About 20 day. About 20 day, the 4th leg pullback breaks the range below 20 MA, you know market is going down. So until then, this is sideways. Understand? So bar counting is a very effective way to identify whether the ongoing trend will resume, especially if you keep a 20-day moving average. And this will definitely help you to beat the fear. Okay, Nifty alone went so many times yesterday, right? So many times. Now this is the 20-day moving average. So market breaks previous day high. Now for this 20-day moving average, what am I adding? You can add Cambrilla, right? I'll keep it similar. Float pivots, Cambrilla, don't care. Now this Cambrilla pivots, what it is telling you beforehand, it is telling you below S4 is a breakout, below S3 is a selling zone. And below previous day range, high probability the last swing is broken, go down. Now here, if you're really afraid, you should start counting the bar. Okay, yes, I'm afraid that money will go back. Let me see how many times green will come in a downtrend. So 1 leg pullback. When you see a red bar near S4, S4 will become your stop loss and then go down. If you keep this as your stop loss, then go down, your next entry will be near 20 MA if you have not taken entry here. See how many times you see 4-legged pullback here or even 3-legged pullback. 1, 1, 1. See, it's a very strong trend. This is also 1 leg pullback. Market momentum is so 2-leg pullback. Third one is the green, third leg pullback, and it comes end of the day. So in option trading, you have to be very, very careful in considering the trend reversal. One is always remember the last swing. This is your last swing. Even in uptrend, the last swing high, swing low should be taken upside. That is when the trend will reverse. All right. So here, so okay. See, this is the last uptrend. Market reverses and then goes down the next day or towards the end of the day because the last swing low is taken up downside. So if you consider combine this, the last swings or every swings will act as a support and resistance. And along with that, if you start using the bar counting, and remember that you cannot have more than 4 pullbacks above 20-day moving average because it's a sideway or it's a reversal, then you can beat your fear. That is how I am concluding this session. Hope this was helpful. Please do comment and share. Now, this is itself is a concept in continuation of the pivots and secret of pivot boss price action. So that's a reason I had to take some time to explain you. Hope you will like it. Have a good day. Thanks a lot. God bless you.